T2S will be a single IT platform for settling almost all securities in Europe, eliminating any differences between the settlement of domestic and cross-border transactions. Settlement is an essential part of the value chain. T2S will enable the settlement of securities and cash in central bank money on a single IT platform. T2S will accommodate in one place market participant securities accounts held at either one CSD or multiple CSDs and their dedicated central bank cash accounts. This concept of an integrated model for securities settlement facilitates fast, highly efficient and low-risk settlement. Each securities account held in T2S will be attributable to only one CSD. CSDs keep all of their clients' securities positions in T2S since T2S is not a CSD itself but rather a service for CSDs. The dedicated cash accounts in T2S will be linked to the market participant's main cash account in Target 2 or another non-Euro area central bank RTGS account. Each cash account held in T2S will be attributable to only one national central bank and its respective counterpart. Each central bank cash account may be used to settle transactions relating to the client's securities accounts in one or more CSDs. This account structure fosters efficiency improvements for clients that use more than one CSD. Settlement instructions are matched as soon as they reach T2S. Once matched, T2S then carries out DVP settlement in real time. All CSDs joining T2S will be able to offer their clients cross-border settlement in central bank money, a service that is hardly available today. T2S, settling without borders.
We explain T2S, a single gateway for your collateral management. This is Anne. She's a collateral manager at a large bank. Anne's job is to take care of her bank's collateral needs, finding the right type of collateral for each operation and posting it to the relevant collateral taker. Recently, her job has become more stressful. Due to the financial crisis and increased regulation, collateral must be of a higher quantity and quality than ever before. Overall, Anne's bank has sufficient collateral to meet its obligations, but the collateral isn't always where it needs to be. Other offices of the same bank have collateral managers doing a similar job, each working in the local market. But they can't join forces or help each other because moving collateral across borders is costly and complicated. One day, Anne's bank might have excess collateral in one market, but the collateral is blocked and so cannot be used in another market where there's a deficit. Another day, Anne's bank might have excess collateral in another market and a deficit in a different market. This situation means that Anne's bank needs to keep oversized buffers of collateral in several CSDs. Anne wishes for a way to centralize her bank's collateral assets into a single pool to maximize their use and simplify the transfer process. T2S is just what Anne needs. It's the new securities settlement engine provided by the Euro system, which goes live in 2015. T2S brings together over 20 CSDs in Europe, thus integrating on one platform all the securities accounts of Anne's bank. This means that Anne's bank no longer needs to keep buffers of collateral in many locations because securities are no longer blocked in a local market. In Europe, T2S brings together the accounts of most collateral takers and creates a truly single collateral pool. Furthermore, with T2S, tri-party repo agents can offer Anne's bank improved services. Because T2S offers the functionalities and tools necessary for tri-party repo services to be offered efficiently on the common platform. With T2S, all the main financial instruments will be part of the centralized pool of securities. Anne will therefore be able to hold Eurobonds, investment funds and securities issued both inside and outside Europe in T2S CSDs. T2S delivers the advantages of an integrated model for liquidity management. Securities and central bank money accounts are held on the same platform. Settlement is also possible between securities accounts in T2S against commercial bank money held outside T2S. All this is great news for Anne and her bank. Barriers are removed and collateral can be moved easily from where it is to where it needs to be. So Anne's bank can reduce and optimize its use of collateral. All thanks to T2S, a single gateway for your collateral management. For further information, go to www.t2s.eu.
Good morning, ladies and gentlemen. It's a pleasure to see you here today. I see that you are not fed up with all these meetings on T2S that you have in Sibos, in this Sibos. I have noted that there is not a single day without somebody speaking about T2S, not always us, by the way, but also providers, our customers, the CSDs, the banks, and so on. I take this opportunity to say that you will even have a session in Arabic this evening. If you wish, at our stand, we are going to explain in the language of this region what T2S is doing. Today, my Mark Bell, who is the program manager of T2S, will chair a panel that he will present, introduce afterwards. But in this panel, I think we should deepen 3 points which were made briefly by Yves Mersch, the member of the executive board of the ECB, who delivered the first speech of this Sibos on Monday. And he made 3 points which I think are important. First, he said T2S will be on time. Second, that it will play a major role in collateral management. And third, that it is a global infrastructure. I would like to cover the first point, T2S will be on time. I will say, of course, you should take this statement by understanding that we have absolutely no reason to think today that it will not be on time. We, of course, do not know what will happen at the time of testing, but what we know is that the 5 central banks which are directly involved into T2S will put all the resources needed to complete this project on time, on budget, on specification. This is a very strong commitment of the European Central Bank, of course, but also the central banks of Germany, Italy, Spain, and France, who are, as you know, preparing the software of T2S. A failure of the Euro system or of one of them would be a problem for the reputation, a serious problem for reputation. And this is in the sense that you have to understand the strong statement of Yves Mersch. The 2 other issues, I think, are particularly interesting, and we have chosen the speakers today so that they can cover them from their different perspective. And the 2 questions are about collateral. How can T2S help in collateral management? What are you going to do to help your customers to run their collateral business better with T2S? This is maybe the first question which we would like to see the views of the panel. And the second will be the cross-border dimension. You know that T2S is, as far as I know, the only infrastructure which can do cross-border DVP in central bank money. Does it mean that it has something that it can also help other parts of the world? And that are, Mark, the two questions that I think the audience would like to see an answer from the speakers that you have gathered around yourself. Thank you very much, and good luck, Mark.
Thank you, Jean-Michel. Good morning to everyone. I would like first to introduce our panel of distinguished personalities this morning. So I have next to me Nadine Chakar, who is Executive Vice President of Global Collateral Services in Bonnie Mellon. She has responsibility not only on global collateral services, but product management, product development, and strategy group in this field, I understand. And she manages also the relationship with CSDs in the group. Next to her, our well-known Paolo Cittadini, who is in the London Stock Exchange Group, in charge in particular of the CSD activities in Monte Titoli and LSE group interest in this field. He has been and remains a very active member of the T2S governance, and he is vice chairman of EXDA as well. Next, we have Christian Knudsen, who is the head of payment system of the Denmark National Bank, and is very active also in T2S, bringing his currencies to T2S in 2018, but also being a member of the T2S board, so being a very active member also for our governance. Thibaut de Maintenon, who kindly replaced Masayuki Tokei from JP Morgan, who couldn't make it to Sibos this year at the last minute. So Thibaut, thank you very much, Thibaut de Maintenon, to replace us. He's coming from Deutsche Bank. He's a managing director in charge of global head of direct security services and global transaction banking in Deutsche Bank. We appreciate his participation because he will bring to the panel an angle from his vision of 20 years in security services, having worked in different regions of the world, in particular 6 years in Asia, and now having responsibility globally. And finally, Joël Merer, Executive Director and member of the Executive Committee of Euroclear, well known to us in T2S, very active member in the T2S governance, so needless to present more his activities. So as Jean-Michel said, T2S is about to be delivered. It's reaching new grounds, and it would be interesting to discuss around the two themes that he proposed to discuss today in our panel, collateral management and the interaction with the rest of the world, the global dimension. Maybe first, to order our question, we can focus on collateral management question. There were an interesting study published recently by Pricewaterhouse together with Clearstream on the savings that could bring T2S in terms of collateral. I don't want to discuss the study, but it was a good, I think, light into how T2S can bring benefits. And maybe I could ask you a question in these regards. First, how do you measure this benefit? How anger you have to have these benefits? What is your opinion on this? And maybe also you could give a light on from outside of Europe, how it can bring benefits.
So thank you, Mark. So after the aftermath of Dodd-Frank, and we started to look at a lot of the regulations that were coming to bear, the first thing we were concerned about was actually the potential projections and shortfall of collateral. When we had looked at the various angles, and I think many of you will remember CCBM2 was supposed to provide the benefits of pooling of collateral, that was really one of the benefits or one of the attributes that propelled BNY Mellon to start exploring the setup of a CSD. So we truly believe the benefits that T2S will bring from the pooling of collateral is of probably of utmost importance, and probably the main reason why BNY Mellon proceeded down the path of setting up a CSD. From our perspective, when we look at, again, the shortfalls of collateral, the fragmentation of collateral, so a lot of that liquidity trapped at different levels in the system, as well as the cost of moving collateral, we definitely feel that the T2S, the ability to expand the fungibility and velocity of the collateral in the system is of the utmost importance. So being able to do that by attaching also sophisticated tools around optimization of that collateral, really being able to get it seamlessly or as seamlessly as possible from point A to point B was definitely the component. So while it's really difficult to To comment on the merit, if you will, of the study itself, I think trending and in general, we do believe there'll be immense benefits. Whether also if it does free up the capital in Basel III or not, I think it's also important to remember that it is really going to be based on the take-up. So how many of the collateral agents are going to, and the banks are going to participate in that process. So I think there's a lot of ifs, but it's generally trending in a direction that we feel very comfortable that it's going to be a massive benefit to the system as it comes under some liquidity strains. So that's our position at this point.
Thank you. I like to hear this. Paolo?
Yes, thank you, Mark. First of all, I would like to let me state that this is a really important issue, especially for European environment, also because we have a single currency, but we have a fragmented markets, and especially for our goals, fragmented settlement systems and post-trade systems. So this is really the basic and the starting point for us. What was realized for the collateral is, it, according to my understanding, the completion with what was realized in the past about the cash. Cash and collateral are the two faces of the same coins in a certain sense, in the sense that we have a unique settlement system for the cash, because the Euro system provided us with that, but we don't have a unique system for, let's say, securities, and this is something that is impeding the very the nice flows of trades, especially about the collateral management across Europe. So that's the focal point for us. We have to look at this as a unique process, because they are the same. They are the same coin, let me say. Especially for the collateral, what is going on and what is the outcome of Target 2 securities, in my mind, the most benefit is about reducing the ask of collateral, because basically we have the Target 2 securities implementation will allow to abandon all the different barriers among the different countries, among the different settlement systems, and therefore we will have this kind of solution available for all European and non-European participants in this sense, because most of these non-European participants are really interested in the Euro settlement and in the movement of collateral about different countries in the Euro area. It was mentioned before that the advantage in the study that was recently published, and you have cited that, they said about that they gave some figures. I mean, I don't have the opportunity to check those figures, but I would like to give some figures that we had calculated as far as our current settlement systems, and I would like also to, on this respect, to say that one of the most important features that T2S is going to implement across Europe is the so-called auto-collateralization. I mean, the opportunity to be financed in advance, let me say, for those transactions that are going to be settled immediately after the at the opening of the daily operations. This actually was introduced in our system since the 2004. So we were able to calculate about the cost reductions or the saving that the banks realized about the auto-collateralization. And we have calculated that on a daily basis about 10,000 of billions of euro were saved in terms of auto-collateralization compared with the total amount of the settlement value which daily is settled in our system. So that it is quite similar to the 15% that our colleagues calculated if you take into account the total gross amount of the settlement of the value settlement on average on a daily basis. So this is a very big saving for the banks. That's really important to be achieved with the implementation with the Target 2 security system.
Thank you very much, Paolo. Christian?
Well, I will just add that the benefits of the single pool of collateral doesn't differ between the euro and non-euro currencies. So you can say non-euro participants will have the same benefits of moving collateral around and have this single pool of collateral which is provided by T2S. And furthermore, for instance, for Danish banks, many of them also possess a large amount of euro securities, so they will also benefit from the, you can say, the euro pool, single pool of collateral. So I can see no difference between euro and non-euro currencies concerning the benefits for collateral management in T2S.
Okay, thank you. Thibault?
I think on our side, I mean, I think what Nadine said about the global collateral pool. I mean, what we see effectively is there is a lot of domestic collateral which is a bit trapped, and there's a lot of initiative from various entities to be able to connect to this different domestic pool of collateral. So clearly, the fact that we have T2S is going to enable then having one pool of collateral, so will make a big difference.
Thank you. Joël, you have a...
Well, being the last to speak is always difficult because almost everything has already been said. No, I will just avoid first to repeat what has been said, but confirm our own vision, which is indeed that T2S will inevitably bring benefits, both from, let's say, an optimization point of view and from a reduction of, let's say, need for collateral. So two being actually the two faces of the same coin. And still, I will not repeat what Paolo has said in terms of, let's say, auto-collateralization, which will definitely be a very important tool as far as the liquidity needs, the daily liquidity needs are concerned, and therefore possibly collateral. And also, as Thibault just said, the fact that we are going to pool into one single place, let's say, all assets that can be used as collateral, and we need that. We know that going forward, there is, broadly speaking, an agreement to say that collateral needs will increase, and the challenge will therefore not be about the quantity of collateral, but where the collateral can be made available. It's more about moving the collateral, and therefore having a single place where you can have a concentration of collateral is by definition something that's going to help. And just one last comment. What we also strongly believe in is the fact that going forward, we may probably have a very effective interaction between what T2S is going to provide and what systems which are today provided by the so-called private sector will also provide going forward, like collateral, like Euroclear, etc. So if you combine all these tools, we may end up with a very effective collateral management landscape in Europe going forward.
Yeah, thank you very much. Is there any question from the room on the collateral topic? Liquidity saving? Jean-Michel? Maybe you wait, there is a microphone coming. I mean, other people than Jean-Michel can ask questions. Because he already asked 2 questions at the beginning of the introduction.
Thank you very much. I'd like a more precise question to Christian. Christian, you said T2S will help also non-euro. It's not just a help in terms of collateral management. it helps also for the euro. It also helps non-euro. But why, in your mind, why do you think that only the Danish market has understood that?
Yeah, that's a good question. First of all, Denmark is very close to the euro area, also concerning the Danish participants deals a lot in euro-denominated assets as well. But I think it's a question of time and timing. At the time of the signature of the framework agreement, I think it was difficult for decision makers to make these long-term investments, because you have to pay the upfront cost of changing your systems, adapting to T2S, whereas the benefits of T2S is for the long run. And when the framework agreement was signed, that was in the aftermath of the financial crisis, and I think it might have been difficult for decision makers to take that decision, this long-term decisions. They might not be around when they reap off the benefits of T2S. But I also truly believe that they will join at a certain point in time. It's from my point of view, T2S is not a euro project, it's a single market project. So if you want to participate in the single market for securities, then you simply have to join T2S. Otherwise, you securities or the issuers' securities, they will be considered as a bit exotic compared to securities settled on T2S.
Okay, thank you very much, Christian. Other question on collateral? Yeah, I have a question over there.
Hi, my name is Taketoshi Mori from Bank of Tokyo Mitsubishi UFJ. It's not a specific collateral issue, but non-euro is the most important, most interesting for me. The question is the T2S can in the future to expand coverage? That means Asian time zone like JGB or Singapore government bond or Hong Kong government. Is it possible to cover? It's also non-euro, but it's the time zone is different. But is it any potential? Potential coverage for T2S.
Thank you very much. In fact, it's a very good in the transition to the second topic we wanted to cover in the panel. Indeed, T2S is a single platform done already with innovative and new features. In particular, we can say that it's a cross-border platform, a cross-currency platform, a cross-CSD platform. So all these features are built in. And so there is an interesting question indeed, in light with Jean-Michel's introduction and the question of our colleagues of Japan, is how much you think, and maybe anyone in the panel may wish to comment on this, but maybe first Thibaut, you see benefit from outside of Europe, maybe, and how do you see that it could simplify both access to Europe, but maybe also answering the question, a wider coverage?
So I think there is a lot of parallel. I mean, when we look, between Asia Pacific and Europe, you can see it's very fragmented, and different currency, different country, different law, different barrier to entry. So clearly, there is a lot of things which are in common. I think sometimes, when you sit in Asia and you see Europe coming to Asia and Europe saying, "I got all the solutions for you in Asia," you tend to think, well, I'm not too sure I want to import all from Europe, because clearly we still have some stuff to fix in Europe. But I think the key thing is clearly there is a lot of thinking in Asia around how Asia can be a bit more harmonized, especially if you look at regulation. It's just a simple example, but if you look at some of the regulation which are driven more by North Atlantic, it has some impact in Asia, and sometimes Asia is not fully yet completely organized at the regional level. So the latest one between the Article 25 on EMIR, which prohibiting European bank to have non-European CCP unless they are recognized by ESMA, the European Market Authority. So you had a kind of mad rush from some CCP to file by Sunday the 15th, and the latest between India will file Sunday the 10th. So clearly, there is a growing recognition that APEC, the Asia Pacific Economic Council, that's where Asia need to come together. That's why we've we are part of this Asia-Pacific Financial Forum, which is a private-public debate, basically, between finance minister, infrastructure, but as well banks, to really be able to articulate more, how the North Atlantic framework need to apply to Asia. And the latest on that between financial market infrastructure being one of the agenda points, so we'll definitely see more. But now if we focus on Southeast Asia, because Southeast Asia, if people want to invest in Asia, they all know India, they all know China, because it's a big story. But actually, that's why the Association of Southeast Asia, 10 countries together, which is basically in terms of market cap more than 2 trillion, that make the third market cap market. So there's a link between 6 of them, 6 of the Southeast Asia exchange, to effectively promote this region or sub-region as a good alternative investment. And what is very interesting is, as always, everybody starts at the trading level, and then realize, oh my God, we need to we need to settle somewhere, we need to clear somewhere. So what we've done is put some thinking around how can we help in the process. So we have very good dialogue. We put a white paper out there to explain, or to bring some ideas how to help here. And clearly some of the ideas coming from what we know in Europe. And I do think effectively that there is a massive potential. You can almost think at T2S like a global bridge for the world, or a kind of interoperability, because technically I think there is no limit for if central bank in some market are happy to outsource part of the cash side of the settlement of the leg, you can probably put T2S as a global bridge. And that's a lot of interest, especially in Asia for the bond markets. I think it's a 15 years initiative in terms of the association bond of fund market, trying to see how Asia can foster a lot of local bonds markets, which are very domestic in nature, very difficult to access from outside. And there was even some thinking about some regional infrastructure. Maybe this global bridge could be a solution. So yeah, I'm quite bullish about that. I think the only thing is the approach needs to be very subtle. And it's not Europe solving the issue of Asia. It's more, Asia having some need for its development of growth, and can maybe use a lot of the thinking, because Europe obviously have put a lot of thinking on how to work together. And if you look, for example, at fund passporting, it's very interesting that if you're in Singapore and Hong Kong, you can buy some UCITS, because this fund passporting has been basically used in different countries. And it's a bit the same concept that you can reuse for T2S, I think.
Thank you.
If I can offer a North American perspective, I mean, when you look at Europe just in terms of its demographics and economies, it definitely has the potential of being a lot larger than what it is today. And I'm not quite sure how many of you have seen, there was a McKinsey study done earlier this year that talks about potential balkanization of the liquidity in Europe as more local regulators are trying to exert more oversight just on the wake of trying to track liquidity where it is. So T2S actually comes at a very interesting time as Europe is hopefully on the rebound from its economic challenges. And it would actually put it on a same par, if you will, with the US markets, where we'll be able to track apples to apples on a single platform. I think it makes it a little bit easier. North American investors have always been, looking for investments in Europe. I think it will attract a lot more capital, as it will make as it will make cross-border investments a lot easier. It will break down a lot of the fragmentation in the market, and just make it overall easier to attract capital. So I think it will, as we're emerging out of the economic downturn, I think it will help, if you will, propel it by just attracting a lot more capital and just make it easier. And I think hopefully achieve faster growth across the board. So I think there's a lot of benefits that it will bring, especially in an environment where we're trying to figure out where the regulatory oversight is going to land us, and how much difficulty it's going to cause by trapping liquidity at a national level versus European levels. So I think it brings a fair amount of benefits to the process.
Yes, So both, it brings benefits in interaction and benefit maybe in having a global bridge. Joël, you wanted to add something?
No, just to add something, but which is more or less along the lines of what Thibaut said. In fact, the question is interesting because it's about, in fact, providing the benefits of T2S to another class of market players, which are the issuers. In fact, issuers which are non-Euro, non-EU issuers can indeed benefit from the pool of liquidity that T2S is going to create, and therefore give not only more liquidity to their own issues, but also if it comes to, let's say, some sovereign bonds, to the extent that sovereign bonds could become eligible to monetary policy operation, but that's a Eurosystem decision, of course, it's not T2S. That could also be probably from this issuer perspective a big advantage. And the good news, if I may say so, is that tools are already in place in T2S to allow this kind of global bridge Thibaut was referring to. It's also called for the experts technical issuer CSD, meaning that a CSD, which is a T2S CSD, can be the entry point for non-EU, non-Euro securities into T2S. So there is probably mutual benefits that can be drawn from these technical features.
Yeah, but do you think we should go as far as designing a standard gateway to this?
Standard, sorry?
Standard gateway to allow for this interaction for T2S World?
It's probably too early to talk about standard gateway. Well, intuitively, I would tend to believe that starting from what will exist in T2S, which by definition is standard, then it will be probably, there will be probably a need to kind of fine-tune depending on which issues, which country, which specificities, which link between the T2S CSD and, let's say, the quote-unquote foreign CSD we are talking about. But basically, to me, tools are in place, indeed, to kind of broaden, for the benefits of all players, the scope of T2S, definitely.
Excellent. Paolo, you wanted to add something, I think?
Yes, I would like to point out about the impact, the efforts that T2S will have both outside Europe and within Europe. And I would start from the point that Thibaut cited before about some new rules, some new regulations, and the impact that the new regulation about EMIR, for instance, combined with the introduction and the implementation of T2S will give to the market. Let's say, in my mind, there will be also some other models that will be used and introduced about the management of collateral. And I would like to give you the example that we are experiencing right now. Maybe that most of you will know that the London Stock Exchange Group is going to found out a new CSD in Luxembourg, but this is related to the fact that one international player, I can say that, the JP Morgan, has signed with us an agreement in order to manage the collateral that they are going to inject in our accounts and in their accounts with us, I mean, just because they have realized that the combination of the new EMIR regulation about the accounts for the CCP in the CSD and the potential which is embedded in a solution like Target 2 Securities is giving them the opportunity to select the, let's say, one single gate for the collateral management, not only for the Euro securities, but for all worldwide, on a worldwide basis, because they have understood that what is really the potential for the message is to combine in the same accounts all the different accounts with the different central counterparties and operating on a daily basis across the world. They are able to manage their collateral internally with their account and with their collateral deposited with us. This is really important because it's giving you the idea that there isn't one single model for collateral management for CSD, let me say. On this respect, I would like to stress that the CSD, the Monte Titoli, and the new code, the new CSD that will be created in Luxembourg, will offer just not a technical platform for collateral management, but the basic services for settlement and for custody and safekeeping, just to make and to give the opportunities to one international player like JP Morgan to operate more efficiently their own collateral management platform. That is a new model if compared with the one that we had experienced in the past across Europe and across the world. So T2S and the combination between T2S and the new regulation about CCP is are boosting the creation of new model of cooperation and new business line, let me say.
Okay, thank you. Other of you wants to comment on this question? Do we have more questions from the floor? Christian?
Yeah, I just wanted to mention that I think we as central banker have to overcome our conservatism when we speak about Asia and bringing other non-European countries into the T2S world. We are very traditional, having a monetary policy day. We open the RTGS system in the morning and close it in the afternoon during the settlement day. I think we have to sort of look beyond that and be more flexible concerning the opening hours and settlement cycles.
Thank you. Do you have questions from the floor? I don't want to impede questions from the floor. It's very quiet. Early session.
Still early.
End of the week.
But they already know everything about T2S.
They know everything about T2S. We are convinced it's good. Maybe I would like to explore then a third theme, which you introduced very well, Paolo, with the final remark you made, is that indeed T2S so can help in collateral, can help in global context. We saw in different ways. But maybe also there is a new product line, new business. And if I may turn to you, Nadine, can you explain the concept behind the Bonnie Mellon decision to set up a CSD, how it has come, and can you elaborate on this?
So absolutely. I mean, I talked a little bit, my first question about the pooling of collateral. That was definitely one of the drivers. The other driver was regulation. So, you know, as Paolo cited, EMIR was definitely a factor. So being an SSS and being able to comply, help CCPs comply with EMIR 43.7 was a factor. We also have AFMD. We also saw the event of T2S. You said, I know T2S isn't a regulation, but we thought of it as such, as well as UCITS 5. And when we compared that to the business mix that BNY Mellon has in Europe, so we are a very large global custodian. We are a large collateral manager, asset manager, as well as we provide corporate trust and issuer services, as well as DR. So when you looked at the spectrum of products and services that we offered, we were looking for the best outcome where we can protect, if you will, the franchise. Obviously, CSDR opens up the door to new competition, as we've seen from the market. So protection of the franchise and revenues was of critical importance. The other component was also to try to find a way where we can help our clients comply with some of the regulations coming down the pike. So when you look at AFMD and the liability, for example, that it poses on a trustee, it became overwhelming, if you will, to figure out a way to solve for that across the franchise. So as we had looked for different solutions, we found that the new regulations and the way the trend was moving afforded us the opportunity to explore the setup of a CSD. So we embarked on a project. It was about 2 years that culminated earlier this year with full regulatory approvals from the Belgian National Bank to set up BNY Mellon as a trustee. And as a footnote, BNY Mellon operates in Belgium. It has been for a long period of time, but we also have a very big banking presence there. So it just made a natural fit to establish there. And the nice thing about it is when we look at pretty much all the infrastructure that we had in place, it was easily migrated into the CSD with some tweaking. So when Paulo talks about, if you will, the setup, if you will, of why one of our competitors, chose a different model, I fully agree. It is going to open up lots of different business models. And I was commenting to Jean-Michel before, we as an industry, we get egged on by others, whether other people are going to follow in our footsteps. And I think it's really important for, I would expect every major bank to look at their options. I think everybody should look and see whether a CSD makes sense for them or not. And they will. And that's, I think, part of a lot of the conversation around will we see consolidation down the line because of T2S. And I think there's a little bit of a contradictory paradox that's emerging where we do expect consolidation down the line, but at the same time you're seeing new CSDs pop up. And I think that's a trend that will continue. My feeling there is you'll have a new generation of CSDs that are going to come up that have a different business model, that are actually coming out being, if I may say, T2S compliant right off the bat. So it is not going to take a lot of re-engineering and replugging. And then, within a couple of years, I don't know if it's going to happen within my tenure in my position, but we will project, some consolidation down the road, but it will get replaced by new players. And my last comments here, setting up a CSD is not for the faint of heart. I know Joël will probably and Paulo, agree with that. It is a fairly complex, not just regulatory and approval process that you go through, but really trying to get the infrastructure set up. It's really important to note that, we come from a background of being a global custodian and bankers. So we're not by definition infrastructure players. So there is a shift that's occurring within the way we view the world, the way we operate and service our clients. And it will be fairly expensive in the first periods, as we will have to maintain two models, our traditional global custody model as well as our CSD infrastructure model. And then over time, I'll probably see more of a convergence. So it's been 2 years in the making. My expectations, it'll probably take us many more years for it to reach its full potential. And since I have two of our partners here on the panel as well, a lot has been written about our intentions, if you will, if we're going to go on and take on the ICSDs heads on. And again, I'll say what I said in my first panel earlier this year: we come in peace. Our mission really is to protect our franchise and serve our clients. We will continue to partner and collaborate with Clearstream, Euroclear, the London Stock Exchange, and all our other partners in the player. I think the world is becoming more complex. You can't go it alone. And you do need, whole sets of partners. And I think the beauty of our industry is, while we compete very hard day to day, I think at the end of the day, there's a very strong platform of collaboration and professional respect that will continue. So it's been a phenomenal experience. And if anybody is ever thinking about going down that journey, we'll be more than happy to share our experiences.
Thank you very much. But be reassured, Paolo and Joël are gentlemen. Joël, you wanted to say something.
Just to pick up on what Nadine just said, I think it's then, listening to what you said, it is not a coincidence if the word co-opetition has been invented in our industry, mix of cooperation by definition and competition. Well, what I wanted just to add to what Nadine and Paolo said is that, indeed, not only regulation is coming and will have obviously impacts on our clients, clients of our clients, etc., collateral, all that stuff. But on top of this, it is clear that T2S is also already reshaping our vision of the way we are going to operate. And you can, to a certain extent, assess the importance of something to the point where it starts having an impact even it does not yet exist. And therefore, I think that all of us, I mean infrastructure, but also probably our clients, we have all started to look at, okay, what will the landscape look like in the future? And to me, a main, I would say, well, conclusion, but also consequence of what is being cooked is the fact that we will need more flexibility going forward, definitely, more openness. I do believe that the time of silos, and I'm not talking about only the classical silo, trading, clearing, settlement, but silos more generally as far as collateral management is concerned, etc. To me, the time is over. Right, so, well, in France, you know, we have the concept of so-called lean Maginot, where you build something very hard and you believe that you are protected, but at the end of the day, one day, whoops, things are going around and you are just, okay, without any possibility to defend yourself. So I do believe that from a strategic standpoint, what is key for our clients, but also for us infrastructures, is to come towards it's to go toward more flexibility, more openness. And in that respect, and there are probably several possible models. What we have tried to do, for example, in Euroclear, is to build our strategy around precisely this openness, this flexibility. Collateral IOA, as some of you may know, it's not about bringing everything into Euroclear. It's just to pick up collateral where it is, to leave it where it is, to use it, and then to make it available again 1 hour later, etc. The same for our approach to T2S. Our approach to T2S is obviously not to offer something that is just one size fits all. Just to ask someone, okay, what are your needs? We think we have a solution. If we don't have a solution, we will manage to have it. But basically, more importantly, as I've said, flexibility probably will be a key point. And one thing I would like also to add, because to me it's some kind of, let's say, general element. We shall not forget, and this is a message both for, I would say, European players, but also for non-European players. We shall not forget that harmonization remains a key objective. And that's I would say that's a good news for non-European players, because it means that going forward, the European market will become more harmonized, less fragmented, more simple to a certain extent. The bad news, quote unquote, for European players is that some effort will have to be made, in order to get to this point of harmonization. But it is a key challenge, and maybe one message we can pass this morning to the audience, and particularly to the European audience, is that we shall not, let's say, fall asleep on harmonization. An effort remains to be done, but it is worth doing it going forward.
I cannot share more. I would have liked to say those words as conclusion almost. Thank you. Other comments, yes?
Yeah. Please.
No, I think, yes, you're right. I think the business model is very interesting, because effectively collateral management and the big collateral manager all come with different models right now. I think on the sub-custody world as well is very different, because, the old model where you were, local operation, local CSD connection, we are moving away from that, and clearly, creating some hub, typically could be, in some of the big country, and you have your hub, you're directly connected to the system. You still have your local, expertise for tax, for asset servicing, and all that. But clearly, it's fundamentally what used to be, a multi-booking system in all countries is going now to a more hub strategy with direct connectivity. So it's a large impact for the sub-custody and the agents. And I think what is interesting for us is actually it's the kind of impact a little bit like SEPA on the cash side, okay, where you have to invest a lot because it costs a lot of money to do that. At the same time, pressure on the transaction, because the whole idea is for the end investor to pay less. So it's a great test for commitment in terms of who can play that game. And in that respect, it's a good time. Last point on cooperation, I do agree. I mean, we all like to be at Sibos because it's a great time to effectively discuss together and come with new ideas, and a lot has come that way. I think one thing on cooperation that we'll see more and more is on the netting side. We all are with our settlement and everything, and we like a lot of settlements, but reality is there's a lot of stuff that could be done at the netting level before it touch the settlement, much more than we have now. And clearly, the broker-dealer community is working on that. I mean, if you look at the flow between, for example, an executing broker and a prime broker for hedge funds, and you see all the flow that's going on over there, there's a lot of settlement at the gross level, which frankly doesn't make a lot of sense. So there are netting initiatives at different levels of the industry, and I believe we'll see more on that.
But do you think it's for T2S?
Well, I mean, what it will do for T2S is less settlement coming to T2S, but it doesn't matter. I think at the end of the day, we want an efficiency in the industry. And the more efficient you are, I'm a big believer that you have anyway more volume. Okay. So no lean Maginot.
Yeah. Paolo, you wanted to say something, sorry.
Yeah, thank you. Just to say that I fully agree with the flexibility topic that Joel has put on the table, and at the same time I welcome all the new CSD in Europe. Let me say that market infrastructure are really very strange animal, let me say. The more we are speaking about the consolidation, especially in Europe, about the among them, the more new market infrastructure are created, and that happened. Yes, that happened for the CCPs in the last decade. That is happening also for the CSDs. So this could seem to be a joke, but this is not a joke, because if we are speaking about consolidation, I mean, there will be, in my mind, a consolidation. That is not something that's strictly related to market infrastructure. This is related also to the intermediaries, let me say. As far as we know, the settlement instructions and the settlement world, especially in Europe, has a lot of different intermediaries, or different kind of intermediaries, the global one, the local one, the middle, let me say, my understanding is that this kind of consolidation that for a long time was requested to the market infrastructure only will involve not only market infrastructure, if any, but will involve more some kind of intermediaries. Think about all the intermediaries that are deciding right now whether to be directly connected to T2S or to be indirectly connected, and which are the functionalities that some of them have in a specific geographical area. That's the topic that I would like to give you as an element of discussion, in the sense that this kind of consolidation, the needed consolidation, will involve especially those guys, rather than market infrastructure, at least in the first moment. T2S, when will T2S will start, and Jean-Michel said before and stated that it will be in time, and I confirm that as far as Monte Titolo is regarded. This will invest not only the market infrastructure, but that will invest all the other intermediaries, all the different kind of intermediaries.
Thank you very much. Do we have further questions from the floor? We are getting at the end of the panel. No question on the floor. Maybe I can rebound on what, Paolo, you just mentioned. I mean, we are now 1 year of the opening of the platform for user testing. Not only to you, the question in particular, I think, to at least 3 panelists, but even beyond to the other ones. We are monitoring very closely the progress of the project. You heard my 2 bosses, if I may put it, Jean-Michel and Yves Mersch, who said clearly we are on time, we are on schedule, and we, together with our 4CB colleagues, we really are making all we can to deliver on time. We are working closely with the CSDs and the central banks in their function of central banks to make sure they are on time. So we have a monitoring framework there, and we are helping them. But wider, the market, how do you feel the market is preparing? How the market players, so I would say the customers of the CSDs and the central banks are getting ready? What is your feeling? Joël?
Okay. Well, first I would say so far so good. No, but it's already something to me quite important. So far so good. The good news is that because of the nature of this project, all layers, I mean CSDs, but not only CSDs, but also the users of CSDs have been involved from the outset, meaning that in fact for quote-unquote final users that will not come as a surprise, as have been involved, including in the definition of the specificities of T2S. So that's, to me, a key point from a preparation point of view. Of course, all CSDs have taken action to, let's say, even better inform their users, etc. At more global level, we have started, which I think, and some people in the room are perfectly well aware of that, an action which is quite important is to start a dialogue with potential DCPs, because of course the DCPs that will raise some specific issues, and as by definition DCPs might be the biggest animals playing, let's say, directly with T2S, that's particularly important. So dialogue has started with between CSDs and DCPs, and of course the more we come respectively to the point of migration, the more we will have to speed up on the implementation committees that I guess, and Paolo, I think you are doing to do the same, will be implemented at local level with our clients. When I say locally, with our clients, can be cross-border or foreign clients. So the process is in place. But still, as we are used to say, we shall not be complacent. A lot of work has still to be done, of course. Next year will be a key milestone, because as from October 14, we'll start testing, meaning between T2S and the CSDs, which will be, of course, an important milestone, not only from a technical, from a performance point of view. So far things are going pretty well, but a lot remains to be done, of course. But still, so far, everything is in plan.
And do you see a difference between, because obviously, when you're connected to all the market, and obviously you invest a lot in terms of your solution for your client. But if you're only domestically connected to one CSD and you have a lot of impact, do you believe it could be a bit like SEPA? Because we've seen that on the cash management side, where when SEPA went in, a lot of banks did just the minimum of the change, where some were doing really the profound one.
Well, in fact, of course, it's difficult to speak on behalf of clients or etc. But generally speaking, what I would tend to believe is that as far as when it comes to, let's say, small local clients, I do believe that probably for small local clients, the impact will be probably minimal. Because, in fact, CSDs will remain the interface between clients and T2S. Just, let's say, general comment. I'm not saying that will be valid for everybody, but gut feeling is that for small clients, CSD are in a position to be a kind of, let's say, interface between them and T2S. Of course, the more you go up on the Richter scale of services, etc., then more impact there can be on clients. And of course, for big international multi-markets clients, etc., and of course, depending on their own strategy, impact can be quite significant. This is why, looking at the other way around, it is of course important for these clients, and particularly, for example, for DCPs, to understand what will be the CSD service offering, because they will themselves position their own strategy in function of what CSDs are going to offer. And obviously, there is one word we have not yet been using this morning, which is investor CSD. Investor CSD will be key in that respect. Just for those who are not aware, investor CSD means, in fact, possibility for a CSD to offer access to securities for which it is not the issuer CSD. And particularly, when it comes to the concept of single entry point to T2S, if a CSD wants to offer to its client single entry point to T2S, it means that that CSD will have to become an investor CSD for all T2S eligible CSDs, which is not only for settlement, but also for asset servicing. So I don't know, Thibault, if this answers your question, but my perception that maybe it would be worth having also comments from you, from banks who are in the audience. I think, to me, my perception is now things are becoming a bit clearer in the mind of people. But it's time, I guess, not only for CSDs, but also for intermediaries to start preparing themselves to T2S.
Well, thank you very much. We have reached the end of the panel. It's right on time. I would like to thank you. I think we learned a lot from you. We could develop a global bridge, I took. T2S is reshaping our vision, and it's not that CSD are reshaping to T2S anymore. I like it very much. I think indeed T2S bring new challenges and new opportunities to everyone. It has to be ready soon. It is to be ready soon, and it's a common effort. So it's not only us, the CSDs, the market infrastructure, but it's also the market participants. And it's really a common undertaking that we have all to succeed and deliver. I would like at this stage to thank you very warmly, the panelists, for your participation, and in particular for the last minute of Thibault, who kindly came and joined. Thank you very much.